Chief Investment Officer, Portfolio Wealth Advisors. I got to start with Bitcoin. New highs overnight, 69,000. What's going on here? What are your thoughts?
Oh my God. I mean, Nicole, it's like the manifestation and distillation of the zeitgeist we have, which is inflation is going higher. And when you take a look at, I mean, Bitcoin just represents everything. It represents the excess liquidity that we have in the market when you shove $1 trillion into people's, pocketbooks. So many who are disillusioned with how America's working and markets and all these things. And then on top of that, you have excess liquidity that you have with institutional investors that, basically they're looking around and, if you're over 50, you know what Bitcoin is. You're not interested that much in Ethereum or all these altcoins. It's the granddaddy of all things. And then what you have is, then you start packing on inflation, and it's just the perfect storm. So when you looked earlier this year when gold did that double bottom back in March and was just left for dead, I can tell you, I was on the phone just a week ago with a London gold trader who's been in the business for decades, and he said just the energy for gold just got crushed as all these very wealthy, families, they have these young scions saying, listen, Dad, Mom, I don't want a bunch of bricks of gold. I want to have Bitcoin. It's global. I can move it on a flash drive. I think that, honestly, I think all the gold selling is done with because a lot of those institutions are saying, let me take 5%, 10% of my gold position and put it in Bitcoin as this alternative store of wealth. And I think that's why you've seen this dramatic drive. I think, though, 100,000 is realistic for these reasons. Remember, this is an intangible asset. It doesn't even really exist. And, I'm not saying that anybody should own it. However, if you just think of a 1-to-4 ratio between the market cap of gold and Bitcoin, that would give Bitcoin a market cap about 2 trillion. That'd give us around 100,000 a coin. And I think that's something that we're going to see as more institutions start adopting this. We talked about this a year ago. And nobody really wants to talk about institutional adoption of Bitcoin. But what I can tell you is that's where the focus is going to be. And that's where that next marginal buyer, meaning older boomers, people who want to get a little piece of crypto, this is going to be the way they do it. And then you start adding a Bitcoin ETF. Sure, it starts with futures, but that's going to have this little domino effect, and it's going to rise the market cap because you just aren't making that much. It's a scarce resource. It's phenomenal to watch, but I think it says so much about the big picture of inflation, about earnings, about what our expectations for the future are.
I think that you're hitting, first of all, by saying last year institutions didn't even want to talk about it. I don't think institutions want to talk about it now. I think you're right. I think that they're getting in because they sort of have to, and they still seem somewhat tepid. Even Jamie Dimon, who tried to give it a go, but he still seems somewhat confused about why people want to be a part of it. That being said, 100,000 almost seems like a reality that it will happen. Nobody knows will. Nothing is ever or for sure. But by using the scientific method of taking a portion of gold and saying that quarter or whatever, it would mean 100,000 in Bitcoin. As Eric Adams, the mayoral candidate coming into New York City, wants to teach the kids about crypto. It just seems like, and then once you have the halving, when's the halving again? It's every 4 years. That always helps it too.
Yeah, I mean, here's the thing. Every generation has some new thing that the prior generation doesn't get. I came into Wall Street in the late 90s when we had these internet companies, and there is all these companies that were really the creation of what we call long duration assets, where people started paying it wasn't just a Microsoft or a Netscape, but across the board, people started paying outrageous multiples for companies that were tech-based that, we're pricing in earnings from the hereafter. And you can say that happened in 69 and 1970, but not like it did 21 years ago. Now we have a completely different system. We just have to remember, why is there interest in crypto? Why is there this different system? And I think a lot of it is because, again, like I said before, there's a lot of young people who don't have a lot of financial education. They don't see their prospects as good as maybe the prior couple generations, and they're disillusioned. And then, the other thing.
Okay, let me ask you this. Go ahead. I'll give you 10 seconds for the other thing. Go ahead.
It's the only thing we got where there's a limited amount, period.
Yes.
And that is the best thesis of all.
Well, that brings me to my next point and my next question. And you mentioned the Bitcoin ETF, right? When you talk about you're trading the futures of Bitcoin. You're not actually getting any Bitcoin at all. Then you have Ethereum, right? We were looking at, comes from its Ether and the native currency Ethereum blockchain, which was more than 4,800. That's been jumping. You have Dogecoin, you have Grayscale, you have PayPal, you have Square, you have so many ways that there's Shiba Inu. I mean, there's so much stuff that's like, even I haven't even read up on that one yet. But the point is, how would you advise somebody who may be newer or maybe more cautious or maybe wants to make a fast buck? What do you tell them?
Listen, if you want to make a fast buck, I prefer to trade the Grayscale Bitcoin Trust, right? GBTC is the ticker symbol. It's easy, it's above board, nothing's going to get stolen tomorrow, and it's something you can trade just like a stock. But I caution you, this thing could just plummet, right? There's so much that younger people think they know about this stuff, but I think that this is a new instrument. It is not a 4,000 or 5,000 year brand like gold is. Right? This thing just came on the scene, in the last, dozen years or so. So I would stick to not the futures, but stick to the Grayscale procs, because futures can act funny. A lot of people have learned their lesson trying to buy OIL or ETFs or ETNs that track the price of oil, only to find out that futures doesn't exactly relate to the spot price. We've had disasters back in the volatility crash of 18 in February of 18, where people realized that when you buy these strange little package ETFs that have leveraged futures in the volatility index, you could end up blowing up even if your direction is right. But if you want to hold some, for the long term, you roll the dice, you take your chances, you put a tiny little bit of money you don't need, go to Coinbase, go to some place and buy some physical. It's not for me. There's plenty of stocks that you can make a lot of money in. You don't need Bitcoin to do it. But if you're not fascinated by it, you don't get it. And you don't have to participate to see what it tells us about other markets. And from here going forward, it's now going to be part of what professionals like myself look at. I don't trade oil every day, but I always know what the price of West Texas Intermediate light sweet crude is.
Right. Yeah, me too. I do too, because it does. It's all intertwined, and you're using Bitcoin sort of as an inflation story too, and people are getting out of gold and using Bitcoin. And this could be the digital trading that we see and the crypto trading and currency around the world, right? China and everywhere else, who knows? So I'm glad you brought us Coinbase, GBTC, you said, right? That was the Grayscale that trades.
That's a Grayscale.
I just was looking that up. 52 bucks roughly to get into that. It's great to see you, Lee Munson. Thank you.